Welcome to this special about the commodity markets. What's going on with the commodities? Is the Supercycle party over before it really begins? We'll discuss this today. You'll be surprised what you're gonna see. Let's talk about it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. All right, let's get right into it. We got a lot to talk about. We're gonna talk about all the big commodities and some small commodities, and we're gonna do it on the monthly basis. So each candle is 1 month. We just finished up the month of July. Perfect to do this now. And the advantage of the monthly candles is that it kind of cancels out all the short-term daily noise that we see in the charts, the emotions, and it gives us an overall bird view picture of what is going on. What is the real trend like? And we're going to start off not with copper. We'll get to copper in a second. We're going to start off with gold, obviously. So, here's gold since 2024. As you can see, since the breakout, we had a monster rally, and now we're consolidating the rally. If you look at it on a monthly basis, you can see very clearly, and please, on all the charts, this last candle, whatever it is, you can cross that one out because that is the August candle, which is completely useless. So really what we're seeing here is we have 3 months of consolidation. Everybody's freaking out, but when we look at it, it's 3 months of consolidation. That is completely normal. And I'll show you something historically that'll put things in perspective. But let's look at this now. So we basically went up around 65% in about a year in gold, which is a monster move. The longest consolidation phase we had was always 3 months, right? 1, 2, 3, breakout party. 1, 2, 3, breakout party. 1, 2, 3. If we break out in August, we're still completely in the normal correction phase that we have seen in this current bull market. Now, what is good? What is not so good at right now? If we look at this from a monthly perspective. Well, what's not so good is all these wicks, right? We see long wicks, which means on the monthly, which means that the moves got sold. Someone is taking profits. But we also see that the lower wicks are going higher and higher. So we're clearly seeing that there's no selling pressure in this correction. Rather the opposite. People are buying every weakness so far. We'll see how August goes, but up till July, that's positive. The small candles open to close shows us indecision, shows us basically what we're seeing, a consolidation. Nobody really wants to buy and hold. Nobody wants to sell. Why is that? Well, I always tell you, commodity is a trend following investment vehicle for most of the institutional investors. So there's no trend, they're not buying. Now, I was early, a couple of weeks ago, I think it was, or last week, when we basically broke above this downtrend, calling for this could be the start of the next leg up. Clearly. Why was that? Well, let's go back in time with a time machine to the last bull market in gold. Now, here we go. So, this is the long consolidation phase we have. Last bull market again, right? And as you can see, we broke the downtrend, and that was basically the signal that the new bull market was starting, but you couldn't really see it because we were still under this resistance zone. But what I would want to point out is this. Once we were able to move away and break above the resistance zone, we got a monster rally, right? And if we measure out this move, we can see it comes out almost exactly 67%, and I think the current move is 65 or 67%. Almost identical to the one we just had. And what we saw after that? 1, 2, 3, 4, 5-month correction. We broke the downtrend. We started to move up. We are hiding under the old highs, right? It's not clear yet. And then we break out, boom, next rally starts. So we saw the breakout after all this time, monster move up, just like we had, exactly the same performance, and with a 5-month correction. And that's what I was looking at when I was looking at our situation right now, right? So we're not at 5-month yet, right? We're at 3-month. But everything obviously is moving faster than it did in the 90s and in the 70s because of automated trading. So if it comes out to be the regular consolidation time, and by the way, we saw almost the exact same, I think it's 5 to 6 months on the big breakout that we saw in the 70s in gold. So that would mean 1, 2, 3, August is 4, September is 5. So in September at the latest, according to the historic data, we would see the breakout in gold, and then our price target, as you know, 4,100 to 4,300. Now, overall, everything is fine, right? Uptrend is intact. We made a higher high here. We're consolidating. We haven't made any lower lows. What I do not like is the RSI. As you guys can see, we're still very much overbought. That's not great, right? I would love for us to cool that down. But in order to cool this down, we probably have to go back to 3,000, which hopefully that doesn't happen, but we'll see. So, gold. Wait and see, but overall, this is a bullish consolidation. Under the hood, things look better than they seem in the daily noise, right? We're making higher lows. We're not making higher highs yet. And we see the wicks, we're getting sold off, but there's no selling pressure. So let's get to, oh man, we got to speed this up, otherwise we'll be here for an hour. Might have to do 2 of these. So let's look at silver on the monthly. Moving this up. Looks better than gold. Look at this. We just made a new high. Again, this candle here, you can ignore it. That's August. This is the most recent one, July. Made a new high. Great. Made a higher low. Great. Made a higher high on the close. Great. What do you want me to say? This is bullish. Yes, this wick is not great. However you want to slice it, this is not great. But overall, on a monthly, silver still going up. Does this wick suggest that we're probably going to test 35.40, 35.50 again? Yeah, pretty much. Maybe even the uptrend that has been in place since 2024 if the dollar gains strength, right? And remember, and this is the big problem that freaks out the people right now. We have different problems for different commodities. For gold, right now, it is the trifecta of we don't have a clear uptrend, so there's no trend following money flowing into gold. We have the dollar gaining strength, that's a problem, and we have risk on in the market. And we saw it on the first trading day of August when there was major risk off after the economic data, and boom, all of a sudden gold popped right up. Silver, the problem is we got the shorties. You know the shorties are trying everything they can to keep silver below this resistance zone of $40 an ounce. Because everybody knows once we break over here and close over here, we're going to go here, but that's only the first stop. That's a pit stop. Recharge, refill the tank, Formula 1 race, boom, we're back on the racetrack. So they're going to do everything to push the silver price down. As you can see here with this big wick, we're just able to avoid it. Now, platinum. On the monthly again. If you see this, what are you going to say? Looks great, we're consolidating this breakout, healthy, Probably going to go down a little more, but everything is fine. We're not overheated on the monthly at all, right? We're up there, but we're not overheated. Again, this candle doesn't matter. Only these two matter. We'll probably go a little lower, but overall looks great. Palladium. You see this on the monthly, you say, man, this thing is about to pop, right? Yeah, wick, not great, right? We broke out and they pushed it back down. But highest close since 2023, right? Higher close, higher close, higher close. Super bullish. Look at the RSI. It's just entering buying dynamic territory. I think that's the best way to describe what the RSI over 50 is, right? It means that the buying is gaining momentum. This thing has a lot of room to run. The downtrend from 2023 clearly broken, right? This looks fantastic. Okay. Gotta go. Uranium. You look at it from a monthly. What are we seeing? Ascending triangle, broke out to the upside, perfect. Okay, got it, long wick. We're hitting resistance here. We're consolidating. You see this, you'll probably say, okay, we'll probably test the breakout level here around 33.75 again. If that happens, I'm loading up on my uranium stocks because this looks great. What do you want me to say? Right? Look how much room we have. This is an ETF. This is not some penny stock. This is an ETF. So much money to be made in uranium. Does this look bearish to you? No, short-term correction, but that's normal. That's healthy. Oil. Oil looks interesting. Really, really interesting. I think people are misjudging oil. In a couple of months, when the fourth quarter starts, we're going to revisit my videos for my predictions for 2025 and see how I did. And right now I'm looking at oil and I'm saying, this might make the cut for 2026. Why do I say this? Look at this. Again, this candle doesn't, this red candle here doesn't matter, right? That's August. This is the most recent one. 3 green candles in a row. Yeah. This wick here, nasty. Look what oil did right after it. Great green candle. Higher close, higher close, higher close. Now, we've had this before. We've had this here, right? And we came back down. We had this here, actually four in a row, and came back down. What's the difference? The difference is this downtrend, right? We have broken this downtrend. We confirmed the breakout. We retested it. That's actually textbook. Now we're moving up. And we also broke this downtrend here from 2025. So that is the difference. As you can see here, we're still in the downward, in the downtrend, in the downward move. Same thing here. We tried to break it, but in the end, we just broke back down. So what we can do is we can do this. And you see very clearly, this is the new trend line that is real important, right? Kiss it here, down, kiss it here, down. Tried to break out, got sold off. Tried to break out, got sold off. We're getting there now. If we break this trend line, so if we go over 71 on a close, oil can run really quickly. So this is interesting, right? We're still below the 15 RSI, but as you can see, we're moving up there slowly without not many people noticing. Nobody's invested in oil right now, which I love that, right? Oil stocks, dirt cheap. You get dividends, incredible dividends with these oil stocks. If you're not invested in them, I would highly recommend, if we get a correction in the stock market, and that may bring down some of the oil stocks, especially from the emerging markets, build out your positions. There's something in the water with oil. So let's take a look at the metals. Again, we're going through this quickly. And we're going to start with some of the smaller ones because you can see I don't talk much about things like zinc, aluminum, lead. Why is that? Well, let's look at it. Aluminum, nothing, boring. We're at the same place we were in 2021. No need to talk about it. Zinc, boring. We're at the same place now where we're at 2021. Nothing. All right, lead, boring. We're at the same place where we're in 2021. This looks a little better because you can clearly see there's a sideways trend here. We broke the downtrend, but do we need to be invested in lead? Absolutely not. The only one that's interesting is copper. Now, copper, if you didn't see my video on copper, here's the link. You should watch it. By the way, if you like this information, hit the subscribe button, hit the like button, help us out with the like, help yourself out with the subscription button, because you won't miss a video. And I'm going to talk next week about one of my favorite copper explorers in the US, copper made in the US. You know that is my favorite copper story for this Commodities Supercycle. So, yeah, we all know about this hardcore candle here. But if we look overall, copper still in an uptrend. All we're seeing, if we just look at it on a monthly charts, right? Retracting from the top to the bottom, completely normal. That's how uptrends work. So could we get back down here into this zone? Absolutely. Would I be a buyer of copper, that zone? Well, once we know that the deleveraging is out of the system, yeah, then I would be. I personally prefer, I told you before, I prefer the copper stocks because for them, it won't be that big a problem if the copper price, let's say, stays compressed for a couple of weeks while they're going through all the deleveraging, and then it's going to go back up. That's a lot less risky than investing in the copper, especially leveraged. I would not recommend you doing this. Okay, let's take a look at the end and some of the grains, because we rarely talk about them, right? Wheat. Look at this, looks terrible. What are we doing here? No need to talk about it. Corn. Looks terrible. No need to talk about it. Sugar. Looks terrible. No need to talk about it. You get the picture, okay? So the story is in the precious metals and in energy. That's where the action is. Gold, silver, platinum, palladium, uranium. Those are the markets that are hot. Copper, once we got up through the leveraging, that's hot. The ags are not. No need to get in those. Other industrial metals are not. No need to get in those. Oil, we're going to have a close eye on it. I know, and this is important. Let me finish on this. I know you're frustrated. I know you're looking at this saying, where's the super cycle? Why is there no action happening? I showed you the history of gold. It is absolutely normal that we have a consolidation phase that goes several months. And here's the thing. Think about it from a different perspective. Think about it from the behavioral finance perspective. If a consolidation would not wear you out emotionally, get you close to throwing in the towel, getting you close to doubting the overall investment thesis, then nobody would sell, right? If you knew, it's just going to sit out a couple of weeks and everything is going to go up, then nobody's selling. Consolidations are there to weed out the weak hands. And in order for that to happen, people need to believe that investment case is basically over, that it's not happening anymore, or that something has changed. And that can happen through two different ways. First one is massive price decline. Second, time, right? And gold is a prime example. We're seeing a consolidation over time, which is the healthier version in a bull market, but nobody cares about that, right? Everybody looks short term, looks at the gold price every day and says, this is terrible. Nothing is happening. What happened to my Supercycle? Yeah, Supercycle, it's a Formula One car. No Formula One car can run all 30, 50 laps, however many they run, right? You need to go to the station, you need to change your tires, you need to refill the tank, and then you're back off to the races for the next lap. And that's exactly what we're seeing right now. Look at this chart of gold. With the exception of the RSI, which is not great, right? You look at this chart and you would say that's completely normal. That's it for today. This is the situation in the commodity sector. It looks better than you would think it does. What we're seeing is completely healthy and the normal part. It is all about weekends getting shaken out, right? If we get more weakness, those will be buying opportunities. Hit the subscribe button if you like this content. You can support this channel with a like. That would be very kind of you. Takes you 1 second. Helps us out a million. Have a great day. Bye-bye.